If you're preparing a cash flow forecast and you want to take into account corporation tax, then our cash flow Excel template does this for you. We're on the Info tab and the default setting is to say no to calculating corporation tax. So I'm going to just change that to a yes, and that opens up a number of features. The first one relates to the opening balance. I'm not going to go into detail on opening balances, I'll leave that for another video. But you have the option, as you do for each of the forecast period taxes, to set the month in which the tax is paid. The default is 9 months after the year end, but you can equally set that to 1 month all the way through to 12 months, or you can set it to quarterly. So I'm going to leave that to 9 months. The other function you have is to spread your tax, and this is to spread it over the forecast period. That's better explained by showing you the profit loss report. So I'm going to change that to month 9. If I go across the profit loss account, you'll see that the taxation charge has been calculated automatically is included in month 9, which in this case is August 2018. However, if I change that back to spreading it, yes, back to the profit loss account, you'll see now that that's spread the same tax charge equally over the 12-month period, and you have the option whether you want to have it done that way or not. The other feature you have is the ability to include add-backs or deductions from profits. So the profit pulled in from the profit loss account in the first 12 months of 54,463. If we just have a look at the profit loss account, we'll see that figure, 54,463. We can then add to or deduct from that profit before it calculates the tax. So an example of an add back would be depreciation. So in the first period we've got £2,237 of the depreciation. So I'm going to add that back. So 2237, 2237. So that's increased our taxable profits in this case to 56,700. It may be that you have some deductions, but I'm going to leave that blank for now. But if you have deductions to reduce your tax charge, you would enter that into there. The next column, after the adjusted profit for tax purposes, is the tax rate. Just simply enter the rate of tax applicable to that period end, and then this will be the rate from which the tax is calculated. So in this case, we've entered 20%, and then it will show you the tax charge. So that 11,340 is 20% of the adjusted profit for tax. We also have the facility of where you've made a loss, it may be that you've got a brought forward loss, you can set that against future profits, or if you forecast a tax loss in a future year, you can carry that back as well. I won't go into too much detail and complication on this short video, but it's important to know that the cash flow Excel template will deal with losses in your small business. Let's take a look at the cash flow forecast. There's no payments in the first 12 months because we didn't enter a brought forward, and that's for another video. However, the tax charge that the cash flow Excel template has calculated is included in month 9 of the following 12 months, 11,340. So if we come back to our Info tab, you'll see the 11,340. And across here we've set that to be paid in month 9, the 9th month after the period end. So there you have the 11,340. On this monthly projected balance sheet, you'll see that the taxation creditor is calculated cumulatively throughout the period.